China hits back with 84% tariffs on U.S. goods. Bitcoin drops to $76,000. Bitcoin. China. Reciprocal tariffs. The two biggest economies are in a tariff battle, triggering heightened volatility in both traditional and crypto markets. Last updated, April 9, 2025. Journalist. Tanzeel Akhtar. Journalist. Tanzeel Akhtar. About author. Tanzeel Akhtar has been covering the cryptocurrency and blockchain sector since 2015. She has written for the Wall Street Journal, Bloomberg, CoinDesk, Bitcoin Magazine, and Bitcoin.com. Author profile. Share. Copied. Last updated. April 9, 2025 at 21:09 GMT+3. Why trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Key takeaways. China's latest tariff hike is in direct response to the U.S. imposing higher tariffs on Chinese goods. Tariff increase caused a drop in Bitcoin's value, falling below $76,000 as markets reacted to fears of a prolonged trade conflict. Both traditional and crypto markets are experiencing heightened volatility, with investors concerned about the potential for an extended trade war. In a sudden escalation of trade tensions between the U.S. and China, the Chinese government announced on April 9 that it will impose a dramatic increase in tariffs on U.S. imports, raising them from 34% to 84%. Bitcoin experienced a sharp drop in value following the announcement, falling below the critical $76,000 mark. This latest retaliatory move from China comes in response to recent actions by the U.S., which imposed 104% tariffs on Chinese goods on April 9 after announcing the move April 8. While the U.S. government has argued that the tariffs are necessary to address unfair trade practices by China, the Chinese government's decision to raise tariffs is aimed at leveling the playing field and protecting its domestic industries. Tariffs send shockwaves through global markets. The announcement of these new tariffs has sent shockwaves through global markets, triggering a sell-off in various asset classes. Bitcoin and other major cryptocurrencies had initially shown positive momentum, with early gains hinting at a potential rally. However, as news of China's retaliatory tariffs spread, market sentiment soured, and fears of a prolonged trade conflict led to a reversal in the cryptocurrency market. Risky cryptos have been completely pulverized, says analyst. The current trade war has caused volatility across the board, and we can clearly see the remarkable difference between the likes of Bitcoin, which is down 30% from the peak, to some of the more risky cryptos that have been completely pulverized. Quantum economics founder and analyst Mati Greenspan told Cryptonews. The Trump administration has been really amazing for crypto innovation in the United States so far, with the new SEC dropping cases, a stablecoin bill rushing through Congress, and the recent disband of the Biden anti-crypto task force. We've gone from Operation Choke Point 2.0 to open season for crypto builders overnight, said Greenspan. Bitcoin's decline is a reflection of broader market anxiety surrounding the economic uncertainty created by the trade tensions. Investors often turn to digital currencies like Bitcoin as a hedge against traditional market volatility. However, in times of heightened uncertainty, risk aversion can cause major sell-offs in even the most speculative assets, leading to price declines. The drop below $76,000 shows a considerable retreat from Bitcoin's recent highs, highlighting the fragility of the market. For those who believe that Trump's strategy of shaking the markets is one of short-term pain for long-term gain, this is an excellent time to invest on solid fundamentals, said Greenspan. As the U.S.-China trade war continues to evolve, both traditional and digital markets will likely remain volatile. In the meantime, investors are having to navigate an increasingly unpredictable economic landscape. Frequently asked questions (FAQs). How are escalating U.S.-China tariffs impacting global supply chains? The tariff conflict between the U.S. and China is majorly disrupting established supply chains as companies seek alternative manufacturing locations to sidestep rising costs. This will likely lead to production delays and higher operational expenses, especially for industries like electronics and textiles that are deeply tied to Chinese manufacturing. The broader economic fallout includes potential job losses in affected regions and huge shifts in global trade patterns. What are the consequences of the U.S.-China trade war on the American economy? Tariff measures act like additional taxes and could cost up to $1,500 per U.S. household as early as 2025, according to the Tax Foundation. Simultaneously, Chinese countermeasures on U.S. agricultural exports are eroding the competitive edge of American farmers in global markets. How's the trade war affecting the bond market and interest rates? Trade tensions are fueling instability in the U.S. bond market. As investors grow wary of the economic outlook, rapid sell-offs in U.S. Treasuries are pushing yields higher, signaling diminished confidence in government debt. Fears surrounding potential reductions in Chinese Treasury holdings and the unwinding of hedge fund positions further complicate the Federal Reserve's efforts to manage interest rates in such a volatile climate. Could China leverage its position in rare earth exports as a response to U.S. tariffs? China dominates the global supply of rare earth elements, which are critical for electronics, weapons systems, and renewable energy tech. Although Canada could theoretically fill some of that rare earth elements demand, the trade wars are also impacting relations between that country. By restricting exports, China could disrupt American production in high-tech industries. Follow us on Google News. Trending news. Recommended popular crypto topics price predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Corporate Bitcoin holdings plunge. Did Trump's tariffs just break the bull market? Picoin price soars 60% before dropping. Is volatility the new normal? Why this AI bot might skyrocket your crypto portfolio in 2025. Price analysis. Solana price holds strong above $112 support. Bullish vibes all around? 5 days ago. By Arslan Butt. Blockchain news. Binance leverage adjustment triggers ACT sell-off. Project dismisses issues. April 3, 2025. By Hassan Shitu. Blockchain news. AI won't replace crypto developers anytime soon, says industry experts. 5 days ago. By Rachel Wolfson. Best crypto to buy now in April 2025. Top crypto to invest in. February 19, 2025. By NSS Tavares. New crypto coins to invest in April 2025. 3 days ago. By NSS Tavares. 9 best crypto pre-sales to invest in now. Upcoming token sales. March 3, 2025. By Medkilikutty. 11 new and upcoming Coinbase listings in April 2025. March 3, 2025. By Elijah Rankovich. 12 new and upcoming Binance listings in 2025. March 3, 2025. By NSS Tavares. Next crypto to explode in 2025. Our top picks. September 11, 2024. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2034. October 19, 2024. By Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. August 28, 2024. By Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? August 28, 2024. By Ben Beto.